Hi, I'm Steve McKnight. Thanks for watching this short video. I thought I'd give you an update as to how things are going. Now, in regards to property investors, it does seem to be a pretty tricky time at the moment. Our economy is not performing particularly well. It's certainly performing better than the US economy and many of the economies in Europe. But we do seem to be in what I'm calling a bit of a Clayton's recession. It's the recession we're having when we're not having a recession. Certainly retailers are doing it very tough at the moment, and unless you've got a job in mining, you're probably feeling a little ho-hum. The purpose of this update is to quickly try and realign you against your long-term wealth creation ambitions, rather than getting sucked in to all the doom and gloom information that's out there and, without knowing it, potentially stick your head in the financial sands. When people don't know what to do, often they do nothing. But of course, nothing is always the worst thing to be doing. You need to be making sure that your plans are relevant for your situation and that you're making progress towards them. Because another saying I'm fond of is that to cease to move forward is to begin to backslide, and we simply can't afford to be backsliding. In respect to interest rates, yesterday the Reserve Bank of Australia kept their cash benchmark rate static, or the same, at 4.75%. Now, in the past, when the RBA has left the rates alone, banks have still decided to move independently of it and to increase their rates to protect their profit margins. There's no talk of that in the current marketplace, and that is testament largely to the amount of competition that's going on. Of course, you've probably seen the National Australia Bank ads on TV as they walk through the Bankers Club, as it were, and get dirty looks as they walk past, and we're now the ones who are no longer welcome in the club because they've got their clients' interests at heart. Might be some good marketing spin. What it is showing us is that it is becoming more and more competitive, and the freeze that happened as a result of the global financial crisis is starting to thaw. The other very interesting piece of news that pertains to interest rates indirectly, and particularly the housing market, is the notion that Australians are saving more and more money. Now, you might think, what difference does it make if people save? Well, the answer is, as people are saving, and indeed as they're paying back debt potentially, what we're doing is creating the right circumstances for when the property market and the economy begins to recover, and people will have more money to spend on housing. Indeed, high on the shopping list of people who save, and this is the lesson that was learnt out of the turn of the century into the 2000s, into the market boom there, was that as people save money, once they become more willing to spend it, those savings and that increased purchasing power translates into higher housing prices. Now, I'm not saying that we're seeing that yet, we're certainly not, but I'm pointing out to you an important factor which is happening behind the scenes, which will eventually flow on through into housing prices. As far as what may happen to interest rates between now and the end of the year, yes, there's some controversy. Some of the economists of the big banks are saying they'll go higher, others are saying they'll go lower. My personal opinion is that based on the evidence we see at the moment, there's probably more chance of interest rates going down than there is of them going up, based on the information at our disposal. That said, I'm not predicting that they're going to go up or go down. They're probably going to stay the same. But as an investor, what we need to do is weigh the upside risk versus the downside risk. It seems at the moment the more probable outcome is that interest rates will go down than they will go up, but of course there is no certainty in regards to that. Summarising again in regards to interest rates, on hold, Reserve Bank next meets at the 6th of September, and we'll wait and see what happens between now and then, because world events are moving fast. Overnight, the US powers that be, the politicians in charge, have approved an increase in the debt ceiling. Now, even though that's good news, it's probably averted some kind of financial strife that was going to send a shock through financial markets. What the damage of that argy-bargy in that last-minute decision has meant is that there is now a lack of confidence in the US parliamentarians to support the debt, burden that the country has. Now, if you were China and there was a chance that the US may have defaulted on their debt and you're owed all this money, then you have less confidence in the US lawmakers and the politicians to do the right thing. And this lack of confidence may actually hurt the US economy going forward. I don't know about you, but this is my credit card and there's not $13 trillion owing on it. If there was $13 trillion, I'd probably be a lot more scared. It does seem, for the moment at least, that the financial markets have some certainty in regards to one of the world's largest economies being able to continue in terms of not being a default. But the shockwaves and the damage done to the confidence in the US system and debt system and US politicians still has some way to bear out. The last session for this particular video recording I want to run you through is this notion of what is the right or what is the ideal investment property for you. Now, many investors make a massive mistake from the get-go. What they do is they go and buy a property and then they hope that property makes money. So they lack the strategy to know exactly how the property is going to make money, and they're not in control of the outcome necessarily, because it's generally the market that delivers the profit rather than the investor. Now, you need to be more empowered than that with your investing, particularly if you want to be able to manufacture a profit independent to what the market is doing. And of course, so long as people live in houses, property investors can make money if they can find a problem and turn it into a solution. So in this particular, learning session, what I want to talk to you to start off with is, how do you know what's the right investment strategy for you? Like, should you do renovating? Should you do developing? Should you do buy and hold? And once you've started this strategy, how can you control it to get the outcome that you want? Now, it sounds a little bit funny, but in order to determine what is the right investing strategy for you, the first step is to actually consider what outcome that you are trying to achieve. Now, in real estate, there are two outcomes that investors can achieve. There is a growth outcome and there is an income outcome. So growth outcome is pretty straightforward. It's when the value of your property goes up in value. Income is when you have more income coming in than costs or outgoings going out. So incoming or outgoing, what is the flow of cash? Is it coming into your pocket? Is it going out of your pocket? Now, in regards to both of these types of returns, we can then break them into two subsets. We can break them into generic profits and we can break them into manufactured profits. Generic profits and manufactured profits. What is the difference? Well, a generic profit is delivered by the property or by the property market. A manufactured outcome is delivered by the skill of the investor. Now, what I want to try and encourage investors to do is get away from the passive generic approach into the more active and skill-based manufactured approach. All right, coming back to this question of what is the right strategy for you. The right strategy for you is the strategy that delivers the profit outcome that you're looking for in the time frame that you need it, with the skills and the constraints that you bring to the table. Now, everyone's different, which means that what I need out of my property investing might be different to what you need out of your property investing. But the first step, before you've considered the area or the property to start from, is actually the pre-step of defining what profit is right for you, how much and by when, and then which strategy is going to deliver that profit to you in the time frame that you need. Once you've answered those two questions, you can go away and think of what extra skills do I need to get in order to implement that strategy successfully. And then once you know the profit outcome, the time frame, the strategy you want to use, then we can start defining the areas to look in and the houses to look at. And I'll cover both of those areas in another presentation. In regards to finding a great investment property, shortly I'll be starting a series of one-day seminars, running them in Brisbane and Sydney and Melbourne. And I'd like to invite you to come along. It's been nearly 2 years since I've run a one-day seminar. I've been that busy doing my own investing and handling the things here at PropertyInvesting.com. But recently we surveyed the members of PropertyInvesting.com, and 85.7% in fact of those who responded said they were thinking about buying an investment property in the next 12 months. Well, that got me to thinking, why not start a seminar series that explains to people how to find a great investment property and how to buy it at a bargain price. How to walk through these steps like similar that I've shown you today, but in much more detail, so that you know exactly what strategy you should be using, what area you should be looking in, what properties you should be looking at, and then once you've understood that, how to buy them at a really good price. I would really love for you to be at this seminar. If you're someone who is thinking about buying properties in the next 12 months, perhaps you've lost your way, if you're a first timer, you've read the books and you want to take the next step with your investing, then this is the ideal opportunity for you. More information about these seminars is provided on the links that you can see below this video, as is some further information about interest rates, US debt, and indeed a brand new focus group that we've started at PropertyInvesting.com on those people who are interested in finding out more about US investing. I hope you'll take advantage of those links, take a look at them, and I'll see you on the next recording.